Welcome to Universal Accounting Center's Building a Successful Accounting Service with your accounting instructor, Alan Bostrom. In Session 1, Alfredo's Deli, you'll learn everything you need to know to manage a complete set of books for a business. You'll do it all, including make journal entries, post to the general ledger, make reconciliations, prepare financial statements, and you'll maintain subsidiary ledgers. And now here's Alan.
Volume 4 contains a series of items, but much of its reference material that we'll be looking at later on. However, in Chapter 1, we have a practice set called Alfredo's Deli. Let me introduce you real quickly to the chart of accounts on page number 1.3. We listed our assets up at the top, and we start with our current assets, then we go to property, plant, and equipment. And then in the bottom half, we've got our liabilities and capital on the far column. There really is nothing unique about Alfredo's Deli until we get to the sales and cost section. You'll notice that we have wholesale sales and retail sales, and then we've got cost of goods wholesale sales and cost of goods retail sales. Now, the reason why we distinguish this is because we're going to use percentage of sales in calculating the cost of sales. Will the markup be different in wholesale sales than retail sales?
Definitely.
Sure. And so would that stand to reason then that our percentage cost of sales will be different for those two numbers? And so we're using different cost of sales percentage, so we're going to actually calculate different cost of goods sold. And you'll see that as we get to what journal do we enter those numbers into when we calculate the cost of sales. Which of the journals? Do you remember? Usually it's been the general journal, hasn't it? But one of the unique issues here in Alfredo's Deli is we're going to actually use the standard entries journal, which you were introduced to earlier on in the course, but here you'll get an opportunity to actually work with it, okay? And so this is a perfect example of a standard entry that we would make. There are wholesale sales, retail sales, and we also do catering, which is very common in restaurants and this type of industry, that they might provide catering as an additional source of income, okay? Then we have expenses underneath that. Now, the expenses, nothing unusual there, so we're ready to move on to the source documents, which begin on page number 1.4. And we've taken a sampling of source documents, just certain days out of there, so that we don't get writer's cramp writing everything down for the month, okay? What we've got here up at the top, we've got the cash register sales for February, just a listing. What document did this summary come from? Do you know? We called that the Z-tape, right? Okay, and so we've just summarized the Z-tapes, and then we have the deposits to the right of that. And these deposits came off of just deposit slips. Below that are the invoices for accounts receivable. These are different customers that we have that buy from us on account. And we're going to record each of them, and they are typically wholesale sales. On the facing page are cash receipts. Now, with that in mind, what I'd like you to do is take out, leave your finger here and turn to page 112 and 113. Okay? You'll notice that this journal is already completed, correct? That's good news, except for that's exactly right. This journal is January. If you'll look back on the source documents, what month are we actually entering?
February.
We're entering February, okay? So if you'll turn the page, you'll see February's journal, and it's blank. Now, the reason why we did that is because, one, to give you a template to work from. January is a good template to work from. Very often, you'll run into a business where someone might already have worked the books up until that point, and they have left the company or left the client, and you're just supposed to pick up where they leave off. And you'll be able to see the advantage by looking at January's books. You'll be able to see on February how to enter those transactions. Not only will it be valuable in seeing the format of the journal, but it will also be valuable in seeing how they charge, or in essence credited in this case, different items, so that you can just use that as a sample. Okay? So that's the purpose for that. Let's turn the page back, go back to the checks on page numbers 1.6 up through 1.9. And let's discuss a few of these checks. Okay, there's a bunch of them. I want you to turn to page number 12, to check number 1221, found on page number 1.8. And you'll see it says payroll, correct? So you'll want to note, however, that we have a separate payroll journal, okay? So just circle each of those checks that says payroll, and you're going to want to enter those in to the payroll journal that is provided there. Okay? And that will be separate than the cash disbursements. So you'll skip over those checks when you're doing cash disbursements and put them directly in the payroll journal. And finally, check number 1228. It's a void. We haven't dealt with a void check. But in the real world, you deal with voided checks. Yes. That's the key. What Stephen just said is the key. When you have a voided check, you still list it. Okay? Don't just skip it. Put it in the journal. Even if that means when you're doing it using a computer, you still put a voided check into the computer. Here's the reason. 6 months down the road, you might be trying to figure out who you paid something to. And you might be having trouble finding it, and all of a sudden you notice that there's a gap in the check numbering system. And so you're going to think, oh, that was probably that check. And you're going to go back and do a lot of research and finally found out it's voided. It's best just to note that it was voided. Okay? There's also other reasons. If you're ever audited by the IRS, oftentimes they look for gaps in numbers to see if there's something missing there. They look for those types of things. And so by putting it void, then they understand why that gap exists. It's not really a gap at all. It's just a check was thrown away or lost or voided out. Page number 111 gives a sample bank statement from River Bank and Trust Company to Alfredo's Deli. This is for the month of February. Where are we going to use that bank statement? To reconcile our general ledger to the bank statement, okay?